Welcome back. I'm Pratap here. Today is 5th February 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars. It is a very highly expensive training program, but we are providing complete free training, and all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. And here you have all the training lessons are available. You need to start your training from lesson 1.1. Scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. But you should learn all these training lessons according to my training instructions specified at our Telegram channel. I am providing the link to the Telegram channel in this video description. Please join at our Telegram channel. In the pinned messages at the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. There you can see a message related to the training instructions. So please learn the course according to the training instructions. Definitely you will become a very good independent trader in next 3 months time period. This is how you should plan your training to become a very good independent trader. Okay, now let's get into the analysis of the high liquidity zones identified in the previous day end of the day report. We identified 8 high liquidity zones from daily and 75 minutes time frame. And out of these 8, 3 trades are executed, actually 4. Fourth one is we narrowly escaped from the stopped out trade, however we will discuss. And we got 3 trades, and out of the 2 are stopped out, and one gave very good profit. So let's discuss one by one. First one is KPIT Technologies. This is a 75 minutes high liquidity zone. See here we have a 75 minutes candle. This is a rally candle with a hidden body. Then we have 1, 2, 3, 4 base candles and then a drop candle. This is how our software identified. And this zone is having 2 fine-tuned 15 minutes zones before today, but today in the dynamic live market, that is dynamic zones are created. You learned about dynamic zones in your lesson 21, dynamic fine-tuned zones. And that dynamic fine-tuned zone we got a successful trade. But one of these fine-tuned zones is a fresh zone, and that is stopped out today. So let's discuss how we fine-tuned this 75 minutes high liquidity zone. Let's go to the 15 minutes time frame. In the 15 minutes time frame, you have 2 fine-tuned 15 minute zones. See here. Failed ERC candle as a leg-in, 1 base candle, and then drop candle. You have a rally base drop, dynamic view rally. And here you have a drop candle, medium size leg candle, 2 medium size base candles and a drop candle. So this is another fine-tuned 5 minute zone. And both these 15 minute zones are again fine-tuned with 5 minutes time frame. Let's go to the 5 minutes time frame. And look into both these zones. Here again you have a rally candle as a failed ERC dynamic view, 1 base candle and a drop candle. This is the fine-tuned 5 minute zone. Next you have again here you have a drop candle, a base candle and a drop candle. Because of this big candle, Sometimes you can't see all the candles properly. See, you have a drop, you have a base, you have a drop. So this is the one we are planning our trade. Why not the bottom one? Because bottom fine-tuned zone is already tested zone. When yesterday it was tested yesterday. Day before yesterday, Monday. Monday prices entered into the zone, picked up the orders at 940 candle. See how sharply prices came down. But our software did not list, so we are not aware of this. Otherwise, we would have got a good profit from this. But anyway, this is the one tested. We know this will be violated easily. See, this one is violated. And look into this one. This is a fresh zone, a fresh fine-tuned 5-minute zone. And zone is also looking excellent. But unfortunately, today this one is violated. So that's why it is stopped out. We have to consider this is a stopped out trade. So this one is violated. After that, what happened? Market went close to the distal line. It didn't touch the distal line. It didn't go out of the distal line. After reaching, again it created a new dynamic 15-minute zone here. And then they were started going down. And let's delete these. Before that, let me tell you how much loss we got from the stopped out trade. KPIT Technologies, the stopped out trade, it has given 1,320 rupees loss, which is 0.9% negative ROI as per one futures margin cost. Okay, for better clarity, I am deleting these zones so that you get clarity about the dynamic zones. Dynamic zone is a concept I explained in lesson 21. Probably the last video in lesson 21, I think 21.9 video, I think, if I am not wrong. Please correct me. Go to the 15 minutes time frame. See, in the 15 minutes time frame, a rally candle, base candle, and again a drop and follow through candles. Not only that, again one more drop, base, drop is created. Drop candle, 3 base candles, and a drop candle. It looks like there is a rally, base, drop, right? You should ask a question, why I didn't draw here? Again, maybe we can draw again a rally, base, drop. But let me zoom, you will get clarity. You add the hidden body. There is a hidden body. You get some more bigger candle. And this candle is a leg candle. It is not a base candle. Why? Because it is having body more than 67%. More than 67% body. So it is very close to the leg candle formation. Less than 50% body is base candle. In between 50% and 75%, depending on the situation, you can consider. If it is close to the leg out candle, if it is close to the leg candle formation, consider that as a leg candle. If it is close to the base candle, like less than maybe 58% or 57%, if body is there, then probably you can consider that as a base candle. But this is a 67% body is there more than. So this is the reason why this is the best way. This is a rally candle and then follow through candle as a medium size leg candle. Then drop candle without any base candles in between. So that's why you see this is easily violated. It is creating an impression it could be a base candle, but because of this gap, whatever the hidden gap is there, this candle is changed as a base candle. That's why hidden bodies are very, very important. You learned in lesson 9.3 and 9.4 in your training lessons. In both the videos, you learned about hidden body and hidden zones. So carefully we should understand this concept. Otherwise, sometimes your trades will be stopped out. But this is a perfect one and this is a perfect one. But both we need to fine tune with 15 minutes time frame. So go to the 5 minutes time frame. Here we have an excellent rally base drop is there. And here also you have drop base drop is there. Drop base drop. So two fine tuned 5 minute zones. See, initially our trade was stopped out. We deleted that. Now we are seeing the dynamic. What is dynamic zone? Live market new zones will be created. Again in the retracement prices reach one of these zones, we get new trade opportunities during that intraday. Need not be intraday, maybe today you may not get, maybe after 2 days again prices enter into this zone. If our software lists this stock, probably that day we get trade opportunity. But today what happened, this second zone, first one anyway, unless this is violated, you can't get into first one. Today, this second created dynamic zone, we got the trade opportunity. When this zone was created at 11:35. And when again prices entered into the zone, they entered into the zone at 12:55. 11:55 it was created, 11:35. After 1 hour, again prices entered into this zone, we got a trade opportunity. For some time it was moving here, you got again another trade opportunity. There is a possibility, actually you could have taken 2 trades also, that possibility is also there. Though I am considering 1 trade, why I am saying 3? See, first trade you got, see here you got 1:3 or you got, maybe it failed to reach the target, but you got more than 1:2 actually. Till the least what it got, let me draw. So it has given you 1:3 or actually somewhere a little below we need to take the entry. Yeah, here. You got 1:3 or it achieved. Those who, in case if you would have exited here, again you got another second trade opportunity. This time it reached the 15 minutes target. That way also you can consider, in case if anybody exited at 1:3 RR for the first trade, second trade once again it gave another entry here. If you take one more trade here, this time it might have given you another but anyway, so according to me, let me consider this is a single trade. Whether you got opportunity multiple, either you can take a trade here. If you missed next opportunity, you got at 13:35. Even if you missed again next opportunity at 13:55, and after that price sharply came down and reached the 15 minutes target. Even it is violated, but okay, we exit at 15 minutes. Where is the 15 minutes target? Here you have a rally base rally. This rally base rally, prices reached. Go to the 5 minutes, you understand which candle. At 2:45, 5 minutes candle, it reached the target. So how much profit it has given? KPIT Technologies has given 6,880 rupees profit, which is 4.8% ROI as per one futures margin cost. It is a dynamic fine-tuned 15-minute zone entry. Of course, we take entry in the fine-tuned 5 minutes. Otherwise, risk management is not possible. The comment says a new dynamic 15-minute zone is created. Inside fine-tuned area, you took the trade. That is how you should understand. Next time, you may get another trade opportunity in this zone, this rally-based drop. Multiple tests took place here. Maybe we don't know. So far, we can't confirm. This is intraday test. Maybe tomorrow again, once again it went, and again if it come down, maybe this could be a high liquidity zone. If any new LOTL zones are created, again it could be a high liquidity, at least 80% chances, because we can't confirm 100%. Only software only can identify whether it is really a high liquidity zone or not. But human point of view, at least because based on multi-testing, we are assuming it could be a high liquidity zone. Okay, this is about KPIT Technologies, and there is one more stopped out trade, Lupin. That is a lower time frame, lesson 22 concept, lower time frame horizon. That trade is stopped out, but we have to accept that, no other option. Because we have seen many times lower time frame zone horizon to the higher time frame, we have seen very good huge success rate. But today, such kind of zone is stopped out. First, let us look into the 75-minute zone. This is the 75-minute zone. We have a drop candle, two base candles, and a drop candle. So this is the 75-minute zone. This 75-minute zone is fine-tuned with 15 minutes time frame. In the 15 minutes time frame, you see, you have a drop candle, you have a base candle, you have a, with hidden body, you have a drop candle. 15-minute zone. But I didn't fine-tune with 5 minutes. Why? That we will see. You will understand once we get into 5 minutes. But here you see again, you have a drop, base, drop. So this is again an excellent 15-minute zone as a horizon to this entire 75 minutes high liquidity zone. This is a drop, two base candle, drop, two base candles, and drop. This 15-minute zone is the horizon. Okay, fine. Next, let's go to the 5 minutes time frame. In the 5 minutes time frame, first let us look into the horizon. See, this horizon is having a rally, base, drop, and again follow through candle. The horizon imbalance started from this candle. Actually, if you draw wick to wick, see here from the fine-tuned area, it picked up the orders. But risk management point of view, trading point of view, type 2 proximal we are drawing. Rally, base, drop. But actually, this candle picked up the order from this 5-minute zone. At a type 1 proximal it picked up, and the entire 75 minutes formation has been done. Okay, this is the fine-tuned 5-minute zone in the lower 15 minutes horizon to this. This fine-tuned 5-minute zone is inside the 15-minute horizon to this 75 minutes high liquidity zone. Then what about here? Can't we draw this a drop, 1, 2, 3, 4, 5 base candles and a drop candle? Yes, you feel like drop, 1, 2, 3, 4, 5 base candles and a drop candle. Yesterday also clearly we discussed, many times the charts will be cheating us because of these huge gaps or high explosive candles. If you want to understand the real structure of these candles, you hide, you will get clarity. You just hide. Now you see, look into this candle. This is a very big failed ERC candle, rally candle. Look into this candle length. This candle length is almost same as this candle, drop candle. See, these are the medium size candles. This is a large candle. So that means this is not a base candle. You have a failed ERC. And moreover, this failed ERC can't be used as a leg out. If you consider this as a drop, base, failed ERC can't be used because this candle completely it is not going out of the zone. In the dynamic view, finally, this zone is closed within this base. So this is not a valid leg out. Only special scenarios only failed ERC candle can be used as a leg out. In remaining scenarios, that is qualified as a leg in, but not as a leg out every time. When it will qualify as a leg out, the complete candle body should go out of the zone. It should not be part of the zone. Okay, now you have a failed ERC candle as a rally candle. Now with the hidden body, this is a drop candle with hidden body. In between, no base candle. Such kind of zones will be violated easily. That is what happened. Easily the zone was violated. And unfortunately, this zone is also violated. The 5-minute zone horizon to this entire 75 minutes high liquidity zone. So that's why this horizon is the stopped out trade, Lupin. See here? The fine-tuned 5-minute zone in 15-minute zone as an horizon to the 75 minutes high liquidity zone. And this one is stopped out. 1700 rupees loss you would have got, which is 1% negative ROI. That means you might have lost 1% capital on your investment with this Lupin trade. But okay, that is okay. We have to accept sometimes. If you would have taken all the 3 trades, let us assume, this succeeded trade would have covered. See, 2%, let us assume 2% you might have lost. Still you would have got another 2.8% profit. That is the beauty of supply-demand zone. One successful trade is good enough to cover all your losses. Still it will give you the profits. There is one more trade is stopped out, but we didn't take the trade. We can't take the trade. What is that? The Torrent Power. This is also a 75 minutes high liquidity zone. See, this is the one stopped out. After that again came down. This drop, base drop. And this we fine-tuned with 15 minutes time frame. Rally, base, drop. You can use this as a failed ERC candle as a rally. You can use this as a base and drop. And within this area again fine-tuned with 5 minutes time frame. Here you have this is like a failed ERC candle as a leg-in. You have 2 base candles, and with the hidden body you have a drop candle. You get a body, drop, follow through candles. So zone is very good. But unfortunately what happened? This is stopped out. But why we didn't take a trade? Because everything happened in first 1 minute 9:15 candle. Last 2-3 sessions we've been discussing. We don't consider 9:15 trades at all. 9:15 candle we ignore. As a intraday traders we have to ignore. Even it is successful. Previously we considered whether it is successful or failure, we've been registering. So go to the 1 minute time frame. See, this is the morning 9:15 1 minute candle. It opened here and sharply moved up. After that prices were again coming down from here further. But by this time already this zone is gone. So this is the reason why we don't consider this, because before considering itself, the prices went completely out of, and no more this zone is valid for us to plan any trades. It is an invalid zone for us. So that is the reason why Torrent Power we didn't consider the trades at all. What about the remaining? And one thing is, in remaining, most important thing we should discuss, Metropolis. Metropolis we've been monitoring for the last 3 sessions. Yesterday only it did not list, yesterday live session, but again yesterday evening software it was listed. Day before yesterday we discussed, because we already fine-tuned this zone. Let me go to the 15 minutes time frame. Let me go to the daily chart, you will get clarity. See, from here we've been monitoring this stock. On 31st, 32nd, 1st February, 3rd February also we discussed. 4th February we did not discuss, because 3rd February, end of the day, software did not list. But actually what happened? And all these are all we fine-tuned earlier. We've been waiting when prices comes to this fine-tuned 5 minute zone. Let me directly go to the fine-tuned 5 minute zone. If you did not listen earlier videos, please listen earlier video where we fine-tuned this zone. Here we have a fine-tuned 5-minute zone we have drawn. We have a drop, 1, 2, 3, 4 base candles, a rally candle. And we were waiting. And yesterday again it went, and see here, not only that, again it created a drop, 2 base candles, and again a rally. Imbalance actually started from here but picked up the trades. That means it may give you another trade opportunity. But anyway, today prices are completely outside the zone. We didn't get any trade opportunity today. Metropolis. Just I want to tell you how we fine-tune zones, how they are working. Yesterday only I told when we can go for trades previously fine-tuned zones but not listed by our software. Yesterday, if you don't listen yesterday's video, HLQ analysis video, please listen. Clearly I discussed, we have a big discussion on the topic. Several examples we have seen in the topic. Continuation to the topic, today again we are seeing another example. Because yesterday it picked up we went to weekly time, sorry. Yesterday it picked up and sharply how it moved up. Today continuation further moved up. And remaining, look into the call. This is a daily high liquidity demand zone. Call. Already we discussed earlier. We have fine-tuned this zone. We have a fine-tuned zone here. A 75 minutes drop base rally. This 75 minutes we fine-tuned with 15 minutes time frame. Rally base rally. This 15 minutes again we fine-tuned with 5 minutes time frame. This 5 minute zone is not tested. Prices came very close but they are not tested. At least type 2 proximal is not tested. Last time prices came very close. But at the time they created again a drop base rally, or even you can consider this as a drop base rally. Another LOTL zone is created. That way it enabled a new trades in this zone. So we didn't get any trade opportunity. Next one is Glenmark. This is a daily high liquidity supply zone. Glenmark also previously we fine-tuned this zone. Previously, in case if you did not, let me quickly show you. This is a rally, 3 base candles and a drop. We fine-tuned with 75 minutes time frame, drop base a drop. This is again fine-tuned with 15 minutes time frame. Here we have a rally base. Actually this is medium size candle, you can keep part of the base, but imbalance started from here and continued. And within this 15 minutes area we have a 5 minute zone, fine-tuned 5 minute zone. Here you see you have a drop, base, 2 base candles, and imbalance started from this candle and followed. So this is the fine-tuned 5 minutes area. So this is the area we are planning our trade, but prices did not enter into that zone. And Atul is 75 minutes high liquidity demand zone. Drop base rally, this is what our software identified. And here we have a fine-tuned 5 minute zone. First let's go to the 15 minutes time frame. Here the structures are not good, but here we have a rally base rally 15 minute zone. And no other proper structures here. I didn't convince with this candle as a leg out, so I didn't run. Here also drop base rally, not even if I draw 5 minute structure is not good here. So that's why I stick to this. This is the area. Here you have a drop, 2 base candles and a rally candle, large candle. This is the type 2 proximal. So this is Atul. Prices anyway, they did not come into the zone today. And the last one is Hindustan Copper. This is also a 75 minutes high liquidity demand zone. So this is the one drop base rally. This is the drop candle. You have 1, 2, 3, 4 base candles and a rally with hidden body. And this is the one identified by our software. I fine-tuned with 15 minutes. We have two 15 minutes order flows. First one is not having fine-tuned 5 minutes zone. You might be observing. Why it is not having? Let us see. Go to the 15 minutes time frame. Here you have two 15 minutes order flows. So drop, base, rally. Sorry, this is the one. Drop, base and rally. Drop, base, rally. This is the 15 minute zone. Here we have again a LOTL zone. See, drop, base, rally, LOTL. And here again rally, base, rally. It looks very promising, right? Excellent. With the pro gap, everything is there. But why 5 minute zone is not there? You will understand once you get into 5 minutes time frame. First let us look into this bottom one. Rally, base, rally. So this is the one holding the prices just before the zone. Maybe a strong order flow might be there here. This is the one. Look into this candle. Let me hide the candle. Sometime before we discussed the same scenario in Lupin also, right? Lupin or KPIT? In one of these stocks we discussed. I think KPIT Technologies. KPIT Technologies. Hide the candle. See this candle. This is a failed ERC candle. Huge candle. Such kind of candles, if you consider as a base, there are higher chances this zone will be violated. This is a failed ERC. You have a rally candle in between no base candles. Same thing we discussed. Is it in Lupin? Yeah, I think Lupin we discussed. This is the one in Lupin. See? Lupin also, same thing happened. Did you notice? The moment you hide, see this is a huge ERC candle, failed ERC, rally candle. No base candles, drop candle. So such kind of zones will be violated easily. That is what happened. Same thing may happen even in Hindustan Copper also. But today prices did not enter into the zone. That's why we didn't experience today. But the other one you have seen clearly in Lupin. Similar situation you have seen in Lupin. Lupin is a supply zone, this is a demand zone. That is the only difference. But concept is same. We have a failed ERC candle here. A very big candle. So that is the reason why I did not fine tune with 5 minutes time frame. Because the structure in this zone is not good. See, everything looks attractive. They will tempt us to take the trade because there is a pro gap is there. Definitely we may get success. Maybe prices may work sometimes due to this pro gap area. There could be some hidden order flows might be there. Prices will come and they go up. But really when they get into this area, it will be easily violated. So we should be very careful with such kind of trades. See, sometimes if you miss the trade, not a problem. But if you have some doubts in your analysis, just leave it. You have other stocks, there you will get trade opportunities. So this is about our HLQ zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.